Hey everyone, and welcome. Today we're going to be taking a deep dive into India's banking sector.
Sounds interesting.
Yeah, we've got this really interesting report from the Reserve Bank of India,
Okay.
fresh off the press, published just today, actually, December 26th, 2024.
Oh, wow.
And it was featured in the Indian Express.
Okay.
And get this, the report's highlighting some really positive trends.
Like what?
Well, they're saying that India is seeing a 13-year low in bad loans.
Wow. Okay, so that sounds pretty good.
Yeah. But what does that actually mean for, like, the average person? What does that mean for us?
Right.
We're going to unpack all that today and try to figure out just how significant this is.
Awesome. I'm excited to dive in.
Me too, so let's get started.
Okay.
So this report, it's really focusing on, it's called the GNPA ratio.
The GNPA.
Yeah,
Oh,
GNPA.
yeah.
It stands for gross non-performing assets.
Okay, so that sounds a little jargony.
Yeah, definitely.
Can we maybe break that down a bit?
Absolutely. So what is GNPA?
Well, think of it like this. It's basically the percentage of loans that banks have given out, to people and businesses
Right.
that aren't being paid back as agreed.
Oh, okay.
So, for example, if a bank lends money to, let's say, 100 people
Mhm.
and say 3 of those people aren't making their payments,
Yeah.
that's 3%.
Right.
That's your GNPA ratio. And what this report's telling us is that India's GNPA has dropped to a really impressive 2.5%.
2.5%.
Wow, which is the lowest it's been in over a decade.
A 13-year low.
But-
I mean, that's got to be good news, right?
It is, yeah. That's incredibly positive.
But what does that actually mean for, for people like us, for the average person?
Right, so why should we be excited about this? Well, it's a sign of a really strong and stable financial system.
Okay.
This low GNPA, what it means is banks, they have more flexibility to offer loans,
Oh, interesting.
potentially even at better interest rates.
Okay, yeah, that makes a big difference.
And that's good news for, well, really anyone, right? Anyone looking to, I don't know, buy a home, start a business, even just manage their everyday finances.
Yeah, that makes sense.
So, yeah, lower GNPA, it could actually end up putting more money in our pockets.
That's great to hear. So, it's interesting. The report also gets into some specifics about different sectors and how they're doing. And there are some pretty interesting differences.
Oh, really? Like what?
Well, it turns out that the agricultural sector actually has the highest GNPA ratio. It's sitting at 6.2%,
Okay.
while retail loans are much lower, like way lower, at just 1.2%.
Wow, that's a huge gap.
Yeah. So why such a big difference between, these two sectors?
Right.
What's going on there?
Yeah, that's a really great question.
Yeah.
And it's something that, it really deserves a closer look.
Okay.
So you have to think about this. Agricultural lending, it tends to be a little bit more unpredictable, compared to other types of loans.
Yeah.
Because a farmer's ability to repay a loan, well, it's often directly linked to factors that they can't control, right?
Yeah, I guess that makes sense.
Like, think about the monsoon rains.
Yeah.
If there's a bad monsoon season, you could have widespread crop failures, and that makes it incredibly difficult for those farmers to meet their loan obligations.
Right. So it's not their fault if they can't repay.
Exactly.
But the bank is still out that money.
Yeah, it's kind of like a domino effect.
Okay.
A natural disaster, like a drought, it can ripple through the entire agricultural economy.
Wow.
And ultimately, that impacts the banking sector as well.
It's all connected.
It is, absolutely.
So it's not just about the type of loan, but it's about the risks that come with each sector.
Precisely. And we also have to keep in mind that government policies and subsidies can sometimes influence these things too.
Oh, okay.
Lending practices, especially in agriculture.
Chris.
So it adds, another layer of complexity there.
So many moving parts.
Yeah, it's a complex system for sure.
Okay, so we've got the GNPA, but the report doesn't stop there.
Right.
It also mentions something called net NPA, or NNPA.
NMPA, okay.
And this NNPA, well, it also hit a 10-year low.
Wow. Another positive sign.
Yeah, it seems like it. But what is NNPA exactly?
Well, you're right. The NMPA is another really crucial indicator of just how healthy the banking system is.
Okay.
And essentially what it does is it takes the GNPA, the thing we were just talking about,
Mhm.
and it subtracts the provisions that banks have set aside to cover potential losses from those bad loans.
Oh, so it's kind of like a safety net.
Exactly. Yeah, you could think of it that way.
Okay.
So a lower NNPA, well, that's a really positive sign.
Okay.
It means that banks have strong financial cushions
Right.
to absorb any unexpected shocks or problems that might come up, which makes them more resilient and stable overall.
So lower GNPAs, lower NNPAs. I mean, So far, it sounds like India's banking sector is doing pretty well.
It does, yeah. Things are definitely looking up.
Yeah, but is there anything that could potentially disrupt this, this positive trajectory we've been talking about?
Well, one thing that kind of jumps out from the report is what they call the slippage ratio.
Slippage ratio, okay.
Yeah, and this basically tells us how fast, or I guess you could say the rate at which good loans turn bad.
Oh, okay, so loans that were being repaid on time.
Exactly, but
Yeah.
then something happens
Mhm.
and they become, well, non-performing.
Interesting.
And what's interesting here is that it seems like private banks,
Okay.
they actually have a higher slippage ratio compared to public sector
Oh,
banks.
that is interesting. Why do you think that is?
It's a good question. It could be that private banks, they're taking on a little more risk
Okay.
with their lending practices.
Could it be because they're trying to, grow faster?
It's certainly possible. Private banks are often known for their aggressive growth strategies.
Right.
They're very competitive.
Yeah.
So they might be, I guess, more willing to lend to borrowers who, maybe would be considered a little bit riskier.
Yeah, that makes sense, especially in a, rapidly growing economy like India's.
Exactly, yeah.
There's a lot of opportunity, but also a lot of potential for things to go wrong.
Right, exactly. And it's, it's like anything else.
Mm-hmm.
Healthy competition, it can be a good thing. It can drive innovation.
Right.
But it's also important to keep an eye on those potential risks.
Absolutely. So what happens if this trend continues? Could it affect the stability of the entire system?
Well, it's definitely something that needs to be monitored, right? If the slippage ratio keeps rising for private banks, well, it could raise some concerns about their overall asset quality,
Okay.
which could then lead to, increased scrutiny from the RBI.
Right. You want to step in and make sure things are, under control.
Exactly. And that could mean, stricter regulations to try to mitigate those risks.
So it's a balancing act
It is, yeah.
between promoting growth, but also making sure that the whole system stays stable.
Exactly.
All right. Well, before we jump into all the potential challenges that are, ahead,
Yeah.
let's take a step back and look at the bigger picture here.
Okay.
So the report includes this table that shows the GNPA ratios over the past decade,
Yeah, I saw that.
and it's quite a roller coaster ride.
It is.
Like we see these periods of stability, and then all of a sudden there's this dramatic spike,
Mm-hmm.
and then it dips down again. I mean, what's behind all these fluctuations?
Well, a lot of times these swings in GNPA ratios, they kind of mirror what's happening in the Indian economy itself.
Right.
The ups and downs.
Yeah.
And also global economic events.
Oh, interesting.
Things that happen around the world can have a ripple effect,
That makes sense.
even on a relatively insulated market like India.
Okay.
So, for example, back in 2008, we had the global financial crisis
Right.
that hit economies worldwide,
Yeah.
led to a surge in bad loans, really across the board.
Wow. Okay.
But even domestic policy reforms, things happening within India,
Right.
those can have a big impact as well. Take, for instance, the demonetization initiative a few years back.
Oh, right.
That was a major policy shift.
Huge.
And it really did influence lending and repayment patterns.
So those kinds of things, they can really contribute to those GNPA fluctuations.
Absolutely. They're all part of the bigger picture.
It really is amazing how interconnected everything is.
It is, yeah.
Global events, domestic policies, even, things like monsoon rains.
Right. It all plays a role.
It all plays a role in the health of the banking sector.
Yeah, it's fascinating, isn't it?
It is. It is. But let's bring it back to the present here.
Okay.
What's driving this current positive trend? Is it sustainable?
Well, the current decline in bad loans, it seems to be driven by a few things.
Okay.
First and foremost, the Indian economy itself, it's been remarkably resilient in recent years,
It has.
despite all the global uncertainties.
Yeah, there's been a lot going on.
Right, exactly. But we've still seen steady growth.
Yeah.
And that's led to, improved financial health for both businesses and individuals, which means they're more likely to be able to repay their loans on time.
So stronger economy, healthier banking system.
Generally, yes.
But it sounds like there's more to it than that.
There is, yeah. There's also been a real concerted effort by the government and the RBI to really address this issue of non-performing assets head on.
Interesting.
So they've implemented policy measures like the Insolvency and Bankruptcy Code, for example.
Okay.
And that's helped to streamline the whole resolution process for stressed assets.
So it's not just about preventing bad loans.
Right.
It's about dealing with them more effectively when they do happen.
Exactly, yeah. you have to have a plan in place.
And it sounds like they do.
They do, yeah. And let's not forget about technology.
Oh, right. Fintech, all that.
Exactly. The rise of fintech, digital lending platforms, all of that, that's brought more transparency and efficiency to the whole lending process, which has helped to improve credit assessment.
Yeah, makes sense.
And that can reduce the risk of defaults.
So it's like having an extra set of eyes, right?
Exactly.
Using data and algorithms to make, smarter decisions.
You got it. And if we connect all these dots, this positive trend, it really has the potential to create what we call a virtuous cycle.
Oh, I like that. A virtuous cycle.
Yeah. So as banks get more confident in their lending, well, that can stimulate investment,
right?
Generate jobs, and fuel even more economic growth.
So it's not just about the banking sector.
No, not at all.
It's about the positive impact it has on the whole economy.
Exactly. It's all interconnected.
Wow, it really is incredible.
It is, yeah.
So it sounds like we're in a good place right now.
It does seem that way.
But I'm also curious about the other side of the coin.
Okay.
What are some of the challenges that could, potentially disrupt this positive momentum? Because let's be real, no economic environment is perfect.
You're absolutely right. There are always challenges to consider. For one, the global economic landscape, it's still pretty unpredictable.
Yeah, you never know what's going to happen.
Right. Things like, geopolitical tensions, inflation, rising interest rates around the world.
Okay.
Those can all impact India's growth.
Right. Even when things are going well here, there are still external forces that could come into play.
Exactly. You can't control everything.
So it's a delicate balancing act.
Yes.
Navigating both, internal and external pressures.
You got it.
Okay. So what other challenges should we be aware of?
Well, we touched on this earlier, but the agricultural sector, it still faces some, pretty big vulnerabilities.
Right. They still have the highest GNPA ratio.
Exactly. So addressing those issues, things like better crop insurance, improving irrigation infrastructure, making sure they have access to credit.
Right.
All of that is going to be really vital for the, long-term health of the whole banking system.
Right. Yeah, you got to strengthen the foundation.
Exactly, because if one sector is struggling, it can have a ripple effect, right? It can impact everything else.
Absolutely. So are there any other potential challenges, looking ahead?
Well, we also have to think about this this ongoing digital transformation of the banking sector.
Right. Everything's moving online?
Exactly. And while that brings, a ton of opportunities.
Yeah, like for innovation and efficiency.
Right, exactly. But it also comes with new challenges.
Like what?
Well, things like cybersecurity, data privacy, making sure that everyone benefits from this digital shift.
Right.
And that we're protecting sensitive information.
Yeah, it's like a double-edged sword, right?
It is.
We want to embrace the technology, but we also have to be responsible about it.
Exactly. At the end of the day, a truly healthy banking system is one that works for everyone.
That's a great point. Well, this deep dive has been incredibly insightful.
I've enjoyed it.
Me too. We've covered so much, from GNPAs and NNPAs to all the factors that contribute to a strong banking system.
Yeah, and we've seen how it's all interconnected.
It is.
Global events, domestic policies, even, monsoon seasons.
It's amazing. It really is.
It is, yeah.
And it all plays a role.
Absolutely.
But, it's not just about understanding these, financial aspects. It's about understanding the impact these trends have on real people.
Absolutely. On businesses, on everyone, really.
Well, I think that's a great place to wrap up our deep dive into India's banking sector.
It has been a fascinating conversation.
It has. Thanks for joining me today.
It was my pleasure. Thanks for having me.
And to all our listeners out there, keep those insightful questions coming.
Yeah, keep learning, keep exploring.
We'll see you next time.
Sounds good.
Happy diving, everyone.